Hi, everybody. It's really great to be here. Thank you all for being here as well. I'm really pumped for this. We're all energy transition nerds or general energy nerds, so we're super pumped to have this included in Bloomberg Invest. So this is my way in, right? How's the weather outside, guys? So I haven't been out seriously since about 6. Is it getting better?
A little.
A little. Okay. I was double masked, and I could still taste ash in my mouth. And that's sort of the lead into, I was thinking about this all morning. Are we investing in the right stuff with the energy transition? Is it hydrogen? Is it wind and solar? Is it direct air capture? Should we be fighting actual climate right now and the changes that we're investing in right now when we have California wildfires coming to New York? So I just want to get your quick take on that point to kick it off. Olivia, do you want to kick that off for us?
Sure. I mean, I woke up this morning and my kids were asking me about this.
Yeah.
Like, Mommy, is this what's going on here? What's causing this? And I was telling them, it's getting warmer and it's drier, and these things, can from time to time lead to the types of events that we're having. And I got into the office and I did start thinking about the same thing on my end. Like, are there investment opportunities that we should be looking at outside of what we've already done that really allow us to get at some of these themes? So climate change adaptation, for example. Is that something that we should be spending more time thinking about? So I do think that there are other areas beyond what most of us look at today that could potentially be interesting.
Pooja, what do you think?
I think that you also bring up a very important risk management question, because how do you think about risk to your businesses as a result of what's happening in the environment right now? Today we're talking about air quality. It could be floods, it could be storms, it could be anything like that. So when investors focus on investing in the energy transition, it's not just about the commercial opportunity. It's also about making sure that your businesses are resilient to these kind of changes. The one thing I will say is that there can be a tendency to be reactive, where you say, we need to do something right now. And I always like to bring in a dose of reality when we're talking about the energy transition. So at Carlyle, we've not been reactive. We've been very intentional. We've been very committed to investing in the energy markets. And so it's important to think about this in a strategic manner, and how can you make these investments over the next 5 to 10 years so that you can mitigate the impact of days such as today or yesterday.
I should point out that all these guys have been in this business for 20 plus years, investing in this area. This is not like we just switched when it was cool. Charles, what about you?
I would say that the biggest issue in my mind is we think of this as sort of a local issue. So New York all of a sudden gets hit by bad air quality and everyone says, my gosh, we've got to do something about this. But the fact of the matter is, if we look at where most of the carbon emissions are coming from, it's just under two-thirds are coming from Asia right now. So the U.S. has actually brought down carbon emissions by a pretty substantial amount. They're rising dramatically in places like China, like India. And so I say to myself, how can we fix that problem? And at the end of the day, I really think what we need to do is come up with some technologies that can transfer quickly around the globe, that can help us solve not just the transportation issue, which is sort of 25% of carbon emissions, but the steel, the cement, the fertilizer, the plastics, the agriculture, that together is another 50% of emissions. We've got to solve those problems. I don't think we have any obvious way to do that now, and I think venture capital is probably the way that we're going to come to achieve that.
He does venture capital, by the way, because we weren't clear. So we'll get to more in a second. But Olivia, you mentioned to me before we got on that you do have a water investment, unrelated to what's happening today, but you have invested in water. What was the reason behind that?
So our investment mandate, so we look at many things across the platform, across the broader ecosystem. For us, we've looked at a lot of things around what we talk about as the clean transition. It's happening in the energy sector, but it's also happening in lots of other parts of the value chain as well. So for us, water is one of the many variables that we've thought is interesting, and there's frankly probably more for folks like us to do in the area.
Does that mean to clean the water, or we need to use the water to do the other things?
This particular investment is focused on making water more efficient.
Got it. Okay, to that point, I'd love to know from each of you if energy transition is the right phrase we should be using, and if there's a different phrase that you guys use internally. Pooja, you want to go?
That question brings a smile to my face, because I think every investor you talk to approaches the energy transition in a different way. And so as an investment firm, for us, talking to investors globally, we need to meet investors where they are. So I'll just tell you how we think about the energy transition at Carlyle. We think that in order to invest in the energy transition, you need to cover the entire spectrum of the energy market. So that includes covering not only that barrel of oil, but also covering that electron, and also in today's market, covering that molecule of green hydrogen or green ammonia. But the philosophy that we have taken around the energy transition is invest, not divest. And what that basically means is that, yes, you need to invest in clean energy sources, but you cannot simply say that you're going to divest out of existing carbon-intensive investments. Divesting out of a carbon-intensive investment is just a portfolio construction or portfolio allocation issue. It doesn't actually eliminate a single molecule of carbon from the atmosphere. And we actually think that's an undervalued potential because you have a lot of existing companies as well as assets that can generate some really interesting returns while you work with those teams and decarbonize them over time. So that's how we approach the energy transition.
Who wants to pick up after that? Olivia?
Yeah, I mean, I'd say we approach it in a couple of ways. I think the first is, again, really looking across the platform. We've taken a multi-asset class, cross-platform approach to doing this, whether it's on the credit side, the infrastructure side, the real estate side, the private equity side. You know, we look at all different facets of our business and, you know, what is the right risk-return profile for all these different pools of capital. And again, you know, we've really invested in all different asset classes, all different parts of the sector. I agree. I mean, I think understanding how hydrocarbons move, how molecules move, you know, those are all really important components of understanding really the broader ecosystem we're investing in.
Charles?
To your specific question of energy transition, I think that is the right way to describe it, but I also think it's a very hopeful way to describe it. We've been talking about energy transition for the last 10 or 15 years. We've probably spent 10 or 15 trillion dollars building out wind and solar and batteries, and we've done an incredible job of accelerating the growth of that. But when you step back and look at the facts, we've got, you know, of total energy production in the world, solar, wind, and batteries represents 3 or 4%. You know, 10% is still represented by people burning dung and other things. So I think what we have to realize is that transitions, if this is indeed going, we've never had a transition in the past. Hopefully this will be a transition, and we've got to think, to your first question, of ways to accelerate the transition beyond just, you know, building solar, wind, and power, or solar, wind, and batteries to try to, right now, all it's doing is basically taking up that additional energy demand that's being created by the additional, you know, couple billion people we're going to have over the next couple of years.
So we actually have a nice chart that shows the investment into different areas of the energy transition and sort of where it's gotten the most. And you know where it is, right? Like solar, for example, et cetera, wind, and now we're kind of transitioning to the new stuff. Charles does do oil and gas. We'll get to that in just one second. But Olivia, if you invested in oil and gas, would your LPs freak out?
No, in fact, we have discrete pools of capital at Apollo that continue to invest in oil and gas.
And that's okay, and you can do all, and you can feel like there's room for everyone to do all those things.
I think for different pools of capital, you know, it is absolutely, you know, something that we continue to do. And for us, we've really leaned into the transition. We've set some pretty big targets for ourselves in terms of capital deployed, and we're excited to continue to put capital in those areas as well.
And Pooja, for you?
Look, absolutely. I mean, we've been committed to the energy sector now for the last couple of decades, and we've been very intentional in that commitment, and we've not been reactive. I'll give you an example. We're invested in one of the largest privately held energy companies in Spain right now, Cepsa. We're invested alongside with Mubadala. Mubadala is a very important strategic investor with Carlyle. We've been invested in Cepsa now since 2019. And if you think about what Cepsa's core business is, it is a carbon-intensive business. They're very active in refining products and energy markets within Europe as well as globally. And what we have done is work hand in hand with the management team at Cepsa, as well as Mubadala, in order to implement a transition plan at the company. Not only are we reducing Scope 1 and Scope 2 emissions, potentially even Scope 3 emissions, but we have a strategic plan right now with Cepsa, alongside with Mubadala, where by 2030, we expect more than 50% of their EBITDA to actually come from sustainable fuels. In addition to that, we're investing about 7 to 8 billion euros alongside with Mubadala in green hydrogen within Europe alongside with Cepsa. So again, these kind of decarbonization strategies that I'm talking about, these are not hypotheticals. These are things that we're doing within our existing portfolio companies, and we're very much going to do it with carbon-intensive energy companies as well.
Which is, to your point, not only do you want to decarbonize hard to decarbonize sectors like cement and steel, but talk a little bit about your specific oil and gas investments.
Sure. So we are one of the bigger investors, if you take all our portfolio companies and add them together, in oil and gas production in the U.S. We're also the third largest private developer of solar, wind, and batteries in the U.S. So we play both sides of the fence. And I wouldn't say, to me, it's an either or. Both will be used, I'm pretty confident, for the foreseeable future. And so in the solar, wind, and battery and other sort of ancillary services, you want to make sure that you're investing in the areas that you think will move the energy transition forward as quickly as possible. In oil and gas, we're in the midst of selling a $5 billion business right now. The only reason I think that we were able to sell it for the price we were able to sell it is because it was rated the lowest methane emissions gas company in all of the United States.
So you get the team, you get the assets, you get the business a little bit cleaner maybe or greener, and then you sell it. Are there a lot of buyers right now for something like that?
There are, we've sold $10 billion of assets over the last couple of years. If you look at US government projections, we're using, sadly, just as much oil and gas today as we are in 2050. I believe there will continue to be a lot of buyers. Even if there aren't, prices are so, you had a chart up earlier, prices are so low right now in the oil and gas sector because there is very little capital available that you can buy businesses and basically make 3 to 4 times your money over 10 years and then shut down the business.
You guys all sound like you're on the same page. Is that really true, or are you all being nice?
We all were trained at Goldman, so I mean,
well, yeah, I'm not going to touch that one, but okay, fair enough. Okay, then let's talk about returns for a second. Obviously, as private equity, you can't talk about specific returns, but I did have this chart up that shows, and I'm going to lean into it and look at this. The S&P Global Oil Index is outpacing the Goldman Sachs Bloomberg Clean Energy Index, MSCI World, Bloomberg Electric Vehicle Index, and I appreciate that's cherry picking, like what the returns are in the public market, so I get that. But what do you say to people who are like, yeah, green stuff and energy transition doesn't give me the returns? Olivia, what do you say?
Yeah, I mean, I'd say the reason we're investing in the energy transition is because the returns are good, and we've seen good returns historically. So when we looked at the amount of capital we deployed over the last 5 years in this area, across our entire Apollo platform, it was about $23 billion. Those were done not in dedicated pools focusing on the energy transition. They were done finding good deals for our credit vehicles, finding good deals for our infrastructure vehicles, finding good deals for our real estate vehicles, our private equity vehicles. We were chasing returns the way we always do, trying to find great businesses, great return profiles for our investors. And a lot of these deals ended up in the area. So we see that, and not, as with any asset class, not every investment is going to perform perfectly, but we've been very, very pleased with our return profile there.
Yeah, I mean, look, listen, I would agree with that. I think the commercial opportunity definitely exists. It depends on how you intend to target these kind of investments. If you look at the deals that we've done, almost all of our deals have been originated entirely on a proprietary basis. If you're going to bid the book and participate in competitive auctions, then yeah, maybe the returns are not really out there. But when we're talking about returns, again, I want to come back to the concept of the transition, because we're talking about returns not only associated with, let's say, renewable energy assets or storage assets or green ammonia, green hydrogen. I actually believe that there is an underutilized or undervalued potential around existing carbon-intensive assets as well. It kind of goes back, Alix, to your question about residual value risk or stranded asset risk.
Did I say that? Because that sounds smart.
Well, you were talking about whether there are buyers that exist for some of Charles's assets or not. And I would say that, look, you have the expertise within the management teams. They know how to operate in energy markets. They have the expertise around these large infrastructure projects. These assets are very attractive. They generate some good cash return profiles. How do you work with those assets to optimize them, to reduce their carbon footprint, to position them for an exit? And that's really where we think that we can make a difference, given the expertise that we have, having been an investor in this market for the last couple of decades.
And I'd agree wholeheartedly with Pooja. I think the interesting thing to think about when you think about oil and gas, you think about the cycle of what oil and gas companies do. And we're not so concerned about oil and gas. I think we're more concerned about the carbon that comes from the oil and gas. So gas is CH4. It's a carbon molecule and 4 hydrogen molecules. If you can pull it up, poke a little hole in the ground, pull it out, strip the carbon molecule away, put it down in the ground, and keep the 4 hydrogen molecules, you've created hydrogen. That's how 99% of hydrogen is created today. If you run a pipeline with natural gas in it, you could be putting hydrogen in there. You'd have to change the pipeline a bit. You could be putting carbon in there. You could be shuttling all sorts of things around. If you run a power plant today that burns 100% natural gas, you can probably throw in, I mean, they're building turbines today that can use up to 100% hydrogen. So there are a lot of things, that's sort of the brown to green strategy. There are a lot of things that you can do to help the transition along that takes advantage of the infrastructure that we've spent a century and a half building.
So you don't need shovel ready. You don't actually have to put a shovel in the ground necessarily.
No, no. I mean, you might have to upgrade your
You might
turbine.
need to at some point, but
yes, yes.
Okay, well that's interesting. And then I want to get to kind of location areas. We have another chart that shows sort of where the money is pouring most, and a lot of the money is pouring into China. So just, and kind of dovetail that with maybe something that you're really excited about right now, an investment. Like what region holds the most opportunity, either on a valuation basis or the kind of technology, the kind of companies that are being created, and then what maybe is an idea you're most excited about, Olivia?
So from a regional perspective, I mean, listen, this is obviously a very global topic. We have primarily been focused on North America and Europe, and see just so many opportunities in those markets that we really have continued to focus there. From an opportunity perspective, I'd say a couple things. First of all, we've spent a lot of time around enabling services for many of these sectors. So whether it's on the battery side, on the wind side, on the hydrogen side, you know, we really like that, especially for a private equity asset class. You know, I'd say the other thing we're spending a lot of time around is thinking about the grid. You know, how are we thinking about the grid? How are we using the grid differently than we used to? What are the things that we need to do to upgrade it over time, and all the opportunities to make returns in and around that.
What's your favorite part of that? Because you can go really far up the supply chain in that, yeah?
Yeah, I mean, we've spent a lot of time specifically around batteries, and their role in all this. I think that we're in really early innings around battery storage and how we're using that, and so have had some really successful investments around that, and I think we'll continue to deploy capital there.
Pooja, what about you?
We have a global orientation. I mean, look, obviously, North America, specifically the United States, is top of mind for a lot of investors, given the passage of the Inflation Reduction Act. But even before that, I mean, look, you know, we think Europe is a strategically important market. We're very active in Japan, in Australia, and then also in emerging markets, especially around carbon-intensive investments. I mean, our view is that you really need to do a fundamental analysis around the need around energy sources versus what the incumbent supply stack looks like. And then you find value. So, you know, take Japan, for example. It's a strategically important market for Carlyle. We have an embedded private equity business that focuses only on Japan. So we've got local expertise, local boots on the ground. And it is a market that has very strong demand fundamentals for renewable energy post the Fukushima crisis of 2011. So we're invested in an independent power producer in Japan. They develop, build, own, and operate renewable energy projects in Japan. They're biomass projects as well as solar projects. So we really cast a wide net, and then we really originate opportunities globally.
So before I get to you, Charles, you guys would be more on the later stage of a cycle for a company as private equity, is that true?
So we tend to have more of an asset-oriented investment strategy. So we tend to do less of the VC, clean tech stuff. We do make growth equity investments as well, but we tend to be very downside protected, asset-oriented investors.
And we are very focused on credit, on infrastructure, and on private equity. So we don't have, we have not been focused on growth or venture capital.
And where in the credit structure or something would be interesting?
Really throughout the credit structure.
Oh, interesting.
Yeah. We've got pools of capitals, investments really sort of throughout that.
So Charles, VC, so are you early stage?
We are, well, we have a private equity business, but interestingly in private equity, we will invest in teams that go build businesses. So I'd call it more growth capital. And then in venture capital, yes, we are early stage. And I would say in terms of very interesting opportunities, on the private equity side of things, I think historically solar, wind, and batteries were a very interesting area to develop or to focus on. If you wanted private equity returns, you'd have to focus on the development phase, like the early phase, and then sell it before you had to pour a bunch of money in. I think it's harder today because obviously we've seen for the first time solar production's come down, solar price has gone up, and so we've got a confluence of events that make it a little harder to make money there. That's not saying you can't, but there are all sorts of ancillary services. We own a business called Blue Float that won two concessions in the ScotWind auction, the biggest sort of offshore wind auction in Scotland. And then we got to thinking, so how are we going to build these 1,000-foot tall windmills that we need to float out to the middle of the ocean? And obviously you can't build them in the middle of the country because you can't drive them along a road because you'll take out all the houses on either side. So you got to find a port. There are very few ports around. So we found a port that was being owned by McDermott, an old oil and gas group, that was being transformed into a residential sort of effort. And now we have a 340-acre port, which is bigger than any other port in Scotland, that we can rent out to different groups. We have to dredge it. We'll use the sand to create the platforms for the solar. There are a whole bunch of derricks or platforms out in the North Sea that need to be recycled, so we'll bring them in and recycle them. So that is incredibly exciting. And then very quickly, I would say on the grid, to me, perhaps the most exciting thing on the venture space is really, as you think about, we're going to have to we're trying to electrify everything. That's the way we're trying to deal with this whole issue. So if we are going to electrify things, then we have to expand our grid. But the hardest, you thought it was hard to build a gas pipeline. The last thing you can do is build the grid. It's impossible. We haven't built it since 1975 here, and we have the most messed up grid in this country because it's divided into all these 3 areas, and you can't transmit electricity between them. So the bottom line is, if you want to, if you say it's going to be difficult to invest in the grid, then what about businesses, we call them, virtual power plants, but that sit behind your meter, and they'd say, Alix, we will pay you some money to be able to turn down your heat or turn up your heat or turn on your air conditioner or turn on your dryer at 12 o'clock at night or use your generator or battery to send back when we need energy. I think that type of technology, which is developing quickly, is fascinating because it allows you to not have as much transmission and distribution capability.
Yeah, and there's
since Charles teed it up, I have to mention it. So thank you, Charles. But on the infra side, we actually have an investment right here in New York City. It is a company that was founded in New York City. When we invested, there were 8 employees. Today, there are more than 30 employees. It's called 9 Dot Energy, and they have microgrids around New York City. So it's exactly what you're talking about. They provide grid stabilization services to Con Edison. So we've got projects in the Bronx, in Staten Island, in Brooklyn, and that's exactly what they do. And I think, Alix, what's relevant there is that there are second, third order derivative opportunities that are opening up that are actually quite exciting. And not all of them are going to be billion-dollar plus deals. So, having those flexible pools of capital where you can do maybe smaller deals, maybe you can do growth equity, or maybe you can do, more creative structures can go a long way.
Well, this actually goes to my last question. We only have 3 minutes left. But as I mentioned earlier, you guys have been in this industry for a very long time. This is not like a new industry for you guys when it got trendy elsewhere. And so I'm really interested is like the one thing that's changed the most, say, in 20 years, that's changed either the way you invest or how you look at it or how you deploy the capital. Olivia?
Oh gosh, I mean, so I remember the first deals I worked on when I got into private equity was a large solar business in Europe. And we had so many unknowns at that moment in time. We didn't know how long these panels would last. We didn't know what their efficiency was. We didn't know how we'd tilt them. There were we know how to clean them. There were so many things we didn't know about. And so, you were able to see private equity rates of return on those businesses. Well, obviously, over, the last multiple decades, things have developed in a way that we now understand that. And so that's a different return profile than it used to be. We have businesses now that are where, solar was, 15, 20 years ago, that we are very much, looking at today. So I do think it's nice to see some of these technologies that are truly more venture growth now develop over time to become really regular way mainstream, and there'll be another wave of those things. We may look back in 10, 15 years and say, gosh, we understand everything about the battery, or we understand everything about hydrogen, and the return profiles may have shifted on those. So it is very much an ever-evolving space.
Charles?
I think my biggest learning is that there is no silver bullet. I mean, 20 years ago, we were talking about biofuels, and now we have 60 million acres in the US allocated to growing corn and soybeans to create biofuels, and that hasn't solved the problem. I mean, I think as we think through the energy transition, it's going to take a lot of things, including all of us sacrificing, like maybe not living in 5,000 square foot homes or driving big SUVs. I mean, there are just a bunch of things that we could do today to really help the world, and I'm not sure, we're looking at it from a very New York-centric or US-centric point of view, and we're not thinking about the things that we could do individually, I think, as much as we could to help this change occur.
It's always like not in my backyard kind of thing. Yeah, for sure.
I guess what I would say is that, renewables, energy transition, green economy, it's always been niche-y.
Yes.
And I remember even from my days at Goldman getting excited about a 20 megawatt project and my investment committee telling me, please don't come to us if it's not 500 megawatts. But I think for the first time in a long, long time, what I'm noticing is a convergence between the traditional energy sector as well as the green economy. It might be happening for energy security reasons, maybe not just for climate change reasons, but guess what? It's a win-win on both, on energy security as well as climate change. So that is what is getting me excited, which is that if we can get both of these parts of the market to start working together, that could result in some really interesting opportunities.
Excellent. We just got to zero. Nice job. Thank you so much, you guys. I really enjoyed it. Thank you.
Thank you, Alix.